Thank you very much, Mr. Rami, for your shared views and insights, and we wish the Market 2.0 great success. Ladies and gentlemen, we'd like to extend our sincere thanks and appreciation to His Excellency Sheikh Salman bin Khalifa Al Khalifa, Minister of Finance and National Economy, for honoring us with his presence here today and for his continued support. Ladies and gentlemen, the Market 2.0 conference, hosted by Bahrain Bourse and the Arab Federation of Capital Markets, aims to extend and expand the conversation on leveraging technology to transform global equity trading. It offers a focused platform to explore the future of exchange technologies. Now, with a mission to explore how infrastructure technologies are impacting and shifting the norms of international equity trading, the impact on sustainability and fostering inclusivity, this year's conference brings together innovators, policymakers, and key global leaders into the platform. The Market 2.0 conference this year continues with an updated and far more comprehensive agenda, with plenary sessions involving key experts of the industry, interactive workshops, and networking opportunities, all aimed to offer actionable insights to all attendees. From the rise of retail trading to the cloud versus on-premise debate and the growing need for seamless third-party integration, the event tackles the most pressing tech challenges shaping capital markets. Market 2.0 is about defining the markets we aim to build and the technology that will power them. So I do hope that we deliver on this promise and together achieve our aspirations. We will now take a few moments to set up our stage and start our first highly anticipated session with His Excellency the Governor of the Central Bank of Bahrain. If I may ask you all to remain seated for a few moments until we start. Thank you very much. So, ladies and gentlemen, we are now ready to welcome our first discussion of the day, titled From Vision to Reality, Reshaping the Future of Bahrain's Capital Markets. Now, this fireside chat will explore how the Central Bank of Bahrain plans to strengthen the country's capital markets through strategies that enhance liquidity, global competitiveness, and investor participation, all meanwhile integrating emerging technologies like tokenization, stablecoins, and AI with a robust regulatory and governance framework. So please join me in welcoming our moderator, Mr. Patrick Cook, Head of Middle East and Africa at Euromoney, and of course welcoming His Excellency Khalid Ahmeidan, Governor of the Central Bank of Bahrain, on stage.
Good morning, everyone, to this morning's session, Your Excellencies and distinguished guests. Let me echo what was said before, that it's always a pleasure to be back in the Kingdom of Bahrain and amongst such esteemed company. None more so than who I am joined with today, His Excellency Khalid Humaidan, Governor of the Central Bank of Bahrain, fresh, I think, from a recent participation in the Singapore FinTech Festival, where you've been busy promoting the opportunities within Bahrain's financial sector. So yes, today we're going to talk about moving from vision to reality, reshaping the future of Bahrain's capital markets, which is a broad topic, and we have just 20 minutes. So we will dive straight in. Governor, to set the scene, global markets are in an interesting moment. In the US, the tech and AI-driven rally has recently shown some signs of volatility. Meanwhile, here in the GCC, markets continue to deepen structurally through strong macro fundamentals that were mentioned earlier, active listing pipelines, and reforms that are attracting institutional capital. So against that backdrop, how would you describe Bahrain's capital markets trajectory today? And how do you see it evolving? Where is the upsides for Bahrain? And where do you see the most promising opportunities to differentiate further?
Good morning, one and all. Excellencies, ladies and gentlemen, I'd like to start off by thanking Bahrain Bourse and the Arab Federation for Capital Markets for organizing the Market 2.0. I'd like to start our conversation with a deep dive into public equity markets. We have a development plan for them. It is a priority for us. All stakeholders are involved, and we have a clear plan of what we want to do. When I say it's a priority, this is a topic that is being followed at the highest level. His Royal Highness Crown Prince Prime Minister gets regular updates about our progress. His Excellency the Minister of Finance and National Economy chairs multiple working groups where he gathers stakeholders and we discuss initiatives and we monitor our progress towards our development plans, and the plan is multifold. Clearly, we recognize that there's upside. The easiest way to compare our market is to look at market capitalization relative to GDP. Bahrain, the market cap relative to GDP is 40%. And it's important to compare it to the GCC, where it's 170%, and to compare it to possibly one of the most developed equity public markets in the world, which is the US, where it's 210%. Yes, there might be concerns about valuations, but one thing is clear, there's a lot of upside for Bahrain, and we have every intention to be able to capitalize on that. The plan is multiple-fold. Capitalization is important, but it's not the only thing we're focused on. We want to increase the number of listings, we want to improve liquidity in our markets, and we want to have a plan that will eventually increase the market capitalization. And as a central bank, as the regulator, our job is to make sure that we have all the regulations that support and makes it easier for people to list, encourages people to actively participate in improving liquidity, and collectively, we think there's a lot of upside when it comes to capitalization.
Thank you, Your Excellency. And building on that, so Bahrain's broader economic vision, as we heard before, positions capital market development as both central to economic diversification and also important for broader private sector development. Strategic priorities include deeper markets, more listings, stronger infrastructure, and greater international participation. So with that in mind, what do you see as the core benefits of further developing Bahrain's capital markets, both for the wider economy and the investor? And how is the central bank supporting that ambition?
Absolutely. There's multiple benefits. There's direct benefits, there's indirect benefits, and there is beyond equities when it comes to developing Bahrain Bourse. The direct benefit is obvious. Is the more the valuation of a company is, the easier it is for them to do business, and there's obvious benefits for the investor who makes money. The indirect is large as well. There's there's brokers, there's liquidity providers, there are market makers, there's multiple professional services that support that growth. And there's indirect benefit to the economy. I'd like to share with you a conversation I had with an ex-Minister of Finance of a G7 country. We were talking about encouraging banks to lend to SMEs. Where we are in Bahrain is somewhere between 10 to 12% out of all business lending of banks to SMEs. And I was comparing our number relative to OECD numbers, where there's multiple economies and multiple countries where bank business lending to SMEs is over 30%. And the ex-minister is like, this is obvious, it makes a lot of sense. Large companies in more developed economies do not rely on banks to borrow. And that's why banking balance sheets are free and they have more capacity in order to lend to SMEs. If we are able to develop our capital markets, we should be able to help banks and financial institutions provide necessary funding to SMEs. Clearly, banks will have to do it when they're convinced, when they have enough data, and they're comfortable with the risk. But we think freeing up the balance sheets, improving capital markets has multiple indirect impact on helping us grow our economy. And obviously, the creation of capital or the increase in capital is going to help seed multiple other projects that will also help with our development. And clearly, the development plans are beyond equity. There's debt, there's funds, there's multiple things that could be listed on the Bahrain bourse. And it goes beyond Bahrain. There's many opportunities for Bahrain bourse to service larger economies outside Bahrain. And it's very much in line with our strengths. We have a digital infrastructure that is able to help service things that are further away from us. We have the ability to develop specialized talent that will help us make sure that we have the human capital necessary in order to develop. There is BIBF and Tamkeen. It makes a very unique ecosystem for us to train highly specialized talent in financial services, and we can support it with all the regulations necessary to ensure development.
Thank you. And if we may step back for a moment, so Bahrain does have a reputation really of having one of the most diverse financial ecosystems within the region, and that's supported by a stable, adaptable, and globally integrated regulatory environment. Plus we have here a very rapidly maturing fintech ecosystem. So from your perspective, how would you describe both the strengths and advantages of Bahrain's financial system today? And at the central bank, what are your key priorities for ensuring the system remains both competitive and attractive to the regional and the international market participants?
Financial services is vital to the development of Bahrain. It is a large sector, and it's important when it comes to foreign direct investment, and it's very important when it comes to jobs. Today, financial services in Bahrain is its largest sector. It contributes 17% of our GDP, 17. It's an important source of foreign direct investment. Roughly 2/3 of foreign direct investments in Bahrain is in financial services. And it's a vote of confidence when foreigners think that investing in financial services is attractive, they continue to do so. And in terms of jobs, it's an important source of high-paying jobs. The average salary in financial services is double the average pay in the rest of the economy. As Central Bank of Bahrain, we're in a privileged position. We're very proud that we have a dual mandate of growth and stability, and we think both can be achieved. And we are lucky, and my colleagues that took the stage earlier mentioned that we are a single regulator. It gives us an advantage, and it helps us in conversations with many of the licensees. It avoids contradictions and gaps between different regulators trying to regulate different activities. Our priorities are clear. We think the largest sector in our economy can continue to grow. we're going to prioritize digital, talent development, and continuously reviewing our regulation. When it comes to digital, we have prioritized two main projects. One of them to do with payments, and the other one to do with supervision technology. We're very lucky that we have an advanced payment infrastructure in Bahrain, especially when it comes to instant payments. We are averaging 25 payments per person per month. We probably lead the world when it comes to instant payments. And this is a very good starting point, and we want to continue to develop and invest in our payment infrastructure. We are an economy where financial services has the lion's share. We are an open economy, and half of the population are expatriates. It makes sense for us to invest in all payment rails that connect us to the world. And we want to invest in instant payments, in domestic payments, but the link with cross-border payments with other countries is important, and our ability to make sure that interbank payments are safer and more advanced than they currently are. Supervision technology is important. The easiest way to explain it is today we are relying on periodic reports by our licensees, which by definition means there's a lag between when an institution does something and when the Central Bank of Bahrain or the regulator finds out about it. And the lag could be months. When we move, and we are weeks away from starting this journey, when we move to something a lot closer to real time, the lag starts to contract and compress, and with that we're able to make the system safer and more efficient. In terms of regulation, this is an ongoing process. We've clearly stated our intention to move away from rule-based to more principle-based, where proportionality is considered more. We think benchmarking is important. We continuously compare ourselves, and we look at it knowing what best in class is, but where we try to maintain a competitive edge for Bahrain. And we only do this by consulting and continuously working with the industry in order to make sure that what we prioritize as changes in regulation is something that is desired and suitable and appropriate and is prioritized by the industry as well.
Thank you, Governor. And finally, I'm sure you won't mind me saying that Bahrain has developed a reputation as a forward-thinking regulator. So from open banking to the regulatory sandbox, digital assets frameworks, and most recently the stablecoin regime, Bahrain has really been a trailblazer, not just regionally, but often globally as well. Obviously, these initiatives support innovation, but they also place greater emphasis on the need for trust and governance. So how does the central bank approach the balance that's needed between enabling innovation on the one hand and ensuring the safety and integrity of Bahrain's financial system and the capital market system on the other, particularly as new platforms and technologies continue emerging?
Thank you very much for asking a very, very important question. This balance is fundamental to what we try to do. We have to find the right balance between innovation and safety. And every time we are considering or assessing any activity or any service in the financial sector, we evaluate everything based on the core principles or the first principles. We have to manage systemic risk, compliance, consumer protection, and governance. Systemic risk is key. It is when a failure in one institution could lead to a failure in another institution. This is something that we need to avoid, especially knowing the size of financial services in Bahrain. We have banking assets that are equivalent to 5 times the country's GDP. We need to make sure that risk is contained and it doesn't spread throughout the system. Compliance is also clear. This is very closely linked to our reputation. We need to make sure that only good operators and good money is circulating and operating in our economy and in our jurisdiction. comes to consumer protection, this is our duty. People depend on us, and we need to make sure that disclosures are adequate so people can make an informed decision that suits their appetite. In terms of governance, this is the process of making decisions, and we need to make sure that conflict of interests are managed in a way where we hope better decisions are able to be made. And we think the best way for us to balance innovation and prudential is to use digital tools. The same way that industry is using digital tools to offer their services, we think digital tools will help us become better regulators. And the pace of adoption is important. If we are able to match or hopefully outpace industry in adopting digital tools, we think the overall system will be safer and more efficient. Thank you.
Thank you very much, Governor. And that brings us to the end of this first panel discussion. Thank you very much, Your Excellency, for sharing your insights and outlining the next phase of development for Bahrain's capital market system and the broader financial ecosystem. And thank you everyone for joining us, and look forward to the next insightful panels here at the Market 2.0.
Thank you very much, Your Excellency, and thank you, Patrick, for steering such far-sighted conversations. Ladies and gentlemen, thank you very much for being here. It's been a pleasure guiding you through this part of the event. Now, allow me to welcome Shadi again, who will take us through the next exciting segments of the event.
Insights to changing technology and landscape. This discussion will address how stock exchanges CEOs are navigating